Welcome to another day in the Matrix. This is Red Pill Podcast number 44. Lucky number 44. I hope everyone is having a beautiful weekend out there, or a beautiful start to your week if you're over there in Australia. Sending all of you love and high vibrations. We've almost made it to the month of January. Month of February is starting very soon. Tomorrow will be the last day of the month. So we'll be discussing the monthly close and all of the macro analysis as we set up into the month of February. So go ahead, get yourself relaxed, get a drink, cup of coffee or tea if it's the morning time, a glass of wine, beer, beverage of your choice if it's the nighttime. I'm wishing you guys all an incredible day. It has been super calm for me, just kind of relaxing, drinking some coffee. Actually made some espresso. Just chilling. Thought it would be a good time while I have the energy to make an episode before my workout today. Also, I had an incredible time on the live stream this Friday. I know I took last week off from doing the live stream just because my voice was very strained. Giving it that extra time off, making one YouTube video that week, it definitely helped. Fully recovered now. And it was great to be able to do a 3 hour live stream. I can't believe it. It's like time flew by so fast. I really enjoyed it. I actually have been considering um, maybe doing more live streams, probably in the month of March. I don't know about the month of February because I have some collaborations that I'm doing. I brought that up during the live stream, how I'm going to start doing more collabs. I have an astrologer that I'm in the midst of talking to, and also another channel that's been talking about the Moors and Hermeticism and all sorts of amazing things. So I've been reaching out to some incredibly brilliant people, and luckily they've all been able to get on conversations with me directly and feel out the vibe. And I've been just really resonating with a lot of high vibrational content creators, and it's going to be an exciting year to be able to collab with many people out there and merge communities, because that's really my goal. That was what I brought up in the live stream this past Friday, is how I really want to focus on removing the division as we transition through this 2022 year. And as a leader, I know that someone has to step up. And it's hard for everyone to see reality in this light of love, to really separate all of the differences we have and focus more on what brings us together as a species. And I'm seeing a lot of division in this world right now. I'm also seeing a lot of unity. So by no means am I focused on only the bad. I know there's a lot going on in Canada right now. I'm not entirely sure what are the ins and outs of what's going on regarding the truckers and the protests. And, but I don't want to make this podcast about that because I don't live in Canada. I don't necessarily know what's going on, but moreover, I'm just bringing this up because it's a recent event. And, the astrologer that I was speaking to recently is in Canada, and she was very happy to see the way that the people have been responding to this socialism. And with that being said, there is a lot of unity at this time, absolutely. So I don't want to focus only on this idea of division, but my point is that we're 2 years deep into this pandemic, and I've been seeing a lot of people get frustrated and emotional and anxious, and this is all due to maybe finances or due to what's going on with people's careers or whatever it is. And I get it. I completely understand what's going on. And I've been there too. I've literally, when I was starting a bunch of e-commerce businesses, drop shipping stores online, this was before I was doing crypto. I got us two successful stores running actually right before the pandemic started, and they both got shut down because all the all the logistics in China was basically brought to a standstill. So I watched multiple successful businesses crumble to rubble. Oh, pretty much overnight too, by the way. And then I had to figure shit out. And that's the thing that we need to remember is like highly vibrational beings are extremely resilient, or at least you should you should remember that you're resilient. If you ever forget, remember, like this is all about enlightenment isn't something you find. It's not something you obtain necessarily. It's amnesia. It's something you remember. You remember the Titan that you truly are. And I want to focus on this year in particular because of what's going on this year and the psyops and everything that's going to go on energetically. You know, it's kind of like spiritual warfare in a sense. And some of you may understand what I'm talking about. Some of you might not. That's completely fine. Some of you might have only come to this episode for crypto, and I get it if you're wondering what's going on here, but you need to remember, like, this is holistic. Everything that's going on in our reality, in this matrix reality, is all one. It's all united. And the focus that I'm having on, removing the division and focusing more on community and focusing more on bringing other communities together that other content creators have built is because I want to make this something bigger than just a crypto YouTube channel. I'm really in this for the long run in all ways, to bring together the high vibrational beings who are seeking true freedom, which is infinite awareness. I brought this up in one of my recent YouTube videos. A lot of people get caught up on the financial side of things, but need to remember that there's a process, and part of this process is getting free in your mind. This will locate a lot of it'll remove a lot of fear that you might have and make you more resilient. And this is something that I was like kind of segueing into when I was going through those losses in those couple of successful e-commerce stores I was running. And by the way, I went on to create about 5 or 6 more, and then I ended up becoming a e-commerce store designer where I was helping people. So I have a ton of, I was working with 3 separate advertising agencies, so I had a lot of experience in this drop shipping e-commerce thing when it was trendy, when it was hot. And so I've lived through it. I've lived through the rise and fall of it. And the point of me bringing this up is we need to be resilient. If anyone loses their job because of what's going on with the jab or whatever the hell that's going on in your reality, you need to be able to pivot. You need to be able to move with the flow of what's happening right now. And that's what's going to allow you to be able to make your way through this chaos. Be okay with the chaos. Be okay with all of what's going on right now, because it's just part of the perfection of what's happening. I know it seems like it could be a detour, but all those detours that are seemingly detours are actually getting you on your right path. Your higher self always takes care of you when you make choices based in love, right? Your higher self always takes care of you when you make choices based in love. When you make choices based in fear, you're not going to be able to continue on that progress. It's going to become a standstill. It becomes plasmatized and more solid. And in actuality, you want to become more liquid. You want to be able to flow. And in this flow state, you could be able to conquer anything, whether that be finances, whether that be, just developing a business or just seeking more harmony in your life. A lot of people right now, I only know this because of my ability to connect with so many people across the world. The world's getting quite dark in its frequency. And with that being said, this is where communities and this is where teamwork really, really shines. This is where we as a family, as a unit, as a community could really make change. So that's my focus. And, this month of January, I've been really working hard behind the scenes to develop how I want to pull that off, because it's not easy. It's not easy also to do it authentically, because it's definitely easy to go out there and go with the flow of the algorithm on YouTube and make a video every single day, to make 2 videos a day with the O-face thumbnails and, all this XRPs going to 1,000 shit. I could do that, but I don't. Because that's not how that's not how it's truthfully done. You need to be authentic. You need to be genuine. You need to spread truth if you're aware of truth. I get it. A lot of content creators out there, they're not aware of what's going on in the world stage. And that's fine. No, there's no blaming them. I completely get it. I completely understand that we're all in our journey. We're all learning things. We're all interested in different things. A lot of people are completely fine with just living in ignorance. That is completely. That's I'm fine for that. There's no judgment here. But I gotta admit, I have met people on the YouTube content creator side of things, and I have seen different sides of them, between what's going on in their content and what's going on in their true self. And there's definitely this Hollywood actor type mentality, and I don't vibe with that. That's not me. Anyone who knows me, anyone who knows me, anyone who talks to me knows that the same version of me that they're getting on the live stream is the same one they're getting on a client call, is the same one that I treat people in my real life. There's only one version of me. And the more and more I pay attention to my higher self and I be true to myself, I notice that abundance lies exactly at that place. The place of being true, the place of being genuine. It's not the most liked version. Trust me, when I'm doing what I'm doing, especially in live streams, it's going to create a lot of turmoil. A lot of people are going to get offended. A lot of people are going to take things to the heart. But the ones who know that all of these messages and all these truths are delivered with love, that is where the resonation showcases itself, and that's where everything comes full circle, And that's why people are attracted to this community and do stay in this community for the family aspect of it and the truth of it, because it's a bunch of people that are seeking, people that are trying to progress, especially at a time where a lot of people have forfeited their progress and just caved into whatever's going on in the external realm. But don't do that. Anyone who's listening to this, don't compromise, because compromise is what's going to keep you maintained in that spiral of fear and doubt and uncertainty. And you don't want to be there. You want to be in a place where you're the one holding the controller on the video game. You want to become Neo, and then from Neo you become the One. And that might seem a little deep, but take it for what it is, because it truly is that. In the Matrix movie, he goes from being Thomas Anderson to Neo, which is the anagram of the One. You never see Neo become the One. And that has mostly to do with the fact, and this is something a lot of people don't know, but has mostly to do with the fact that the Wachowski twins, or whatever they are now, I don't know what they're doing, but they stole that story and they manipulated it to be a Hollywood version of a movie. And you have to go learn a little more about Sophia Stewart. Anyways, just get this back on track. I always have fun talking about stuff like this because I think it's the life force energy behind my work. It's really what I spend most of my days thinking about, not about crypto, not about money, not about finances, about the philosophy and about the consciousness, and how infinite awareness is really what sets us free. It's really what allows us to be able to do incredible things while we're here in this matrix reality. It's really the difference. Harmony is something few people seek because most people have their head in the screens. And this digitization of the organic realm has completely stripped it from its genuine nature. Now it's an avatar of what it once was. And this avatar now has completely came and conquered, and it's here to stay. It's the future. This is where metaverse and NFTs and all of this stuff are getting pushed down our throats, because it's part of the grand plan for when humanity can no longer stand the changes that are to come. This will be their escape. This will be their quote-unquote solution. And it's funny how the word solution has the word soul in it, because that's truthfully all they're trying to do here. They're just putting the soul into another virtual. A virtual within a virtual, sort of like a Russian doll. That is what this matrix is anyways. It's a holographic realm. It is something multi-dimensional, and we're hidden in the dimensional crevices of it all. And this does really matter too, because once our minds get to this place, we no longer need to deal with the stress and anxieties of tomorrow. There is no tomorrow. There is no yesterday. There's only now. There's only presence. And when you tap into that presence, you find true bliss. And you could alleviate some of those fears and apply those useless frequencies to something that serves yourself, something that serves your higher purpose. So, I hope everyone is having a beautiful day, and I hope everyone is resonating with this podcast. I want to start talking more about this stuff because, after all, it is the podcast. I actually purposefully stopped calling it the Red Pill episode as we transitioned into 2022 because I want it to be more like a podcast, more like a weekly, almost like a live stream, just freestyled thoughts and how this all ties into finances and how it all ties into what's happening on the world stage and how we can remain harmonious throughout all of the chaos, especially while we're in the crypto market, because this crypto market is wow. It's like a vortex. If you have the patience and you have the long-term mindset, it's completely fine. But a lot of people come to the crypto game with a very short-term plan. And luckily, the people that have been following my work since back in April, March when we got started, that was really the focal point of it all. But it was really back here. The people that were in this crypto market back before when Bitcoin was around this 9,000, 8,000 level, and even the people that were here before that, I mean, the people that made it through this bearish phase, this big weird cup and handle moment down here. If you've lived through all of that, if you've lived through 2018, 2019, then you've seen quite a massive change in not only the cryptocurrency, sector, but you've seen a change in the sentiment and the fear and greed and the content creator side of it. The one thing that's interesting about the content creation side of it is they're always focused on the new trend. And that's why when you see NFTs become popular, every YouTube channel talks about that stuff. When DAOs become popular, everyone talks about that stuff. But when it's no longer popular, they have nothing to say about it. And that's always why I don't do that. I want to break the algorithm. When we're using Gematria Numerology and astrology applications to a market, we're looking at this from the genesis of how markets were manipulated to begin with. This code can be used in precious metals and stocks and bonds, and you could go in the S&P, which has 100 years of chart data here on TradingView, and you could literally start figuring it all out. You could see how the eclipses play a role, how Shemitah plays a role, how the Hebrew calendar in general plays a role, how all of the world events that have happened, big world wars, Spanish flu, I mean, you name it. Gematria will show you why it's happening and the code behind it so that you can utilize that code to completely get a new perspective on how the future will play itself out. Again, not to live in tomorrow, but just to understand what's to come when tomorrow shows itself. So when we're living day to day, you have to be present. You can't possibly use Gematria and all of these esoteric codes to figure out every single cryptocurrency's movement before it happens. That's impossible. There's 15,000 cryptos? That's not the goal, right? The goal is to apply it where you see fit and based on your interests. If you're interested in Algorand, if you're interested in the ISO 20022 coins, take a list of those coins, run the Gematria code on them the way that I teach, and then start looking for patterns. Go back in those charts and go to the past and see what IOTA has been doing year after year. That's where you're going to start to learn a lot about how this code works. then you don't need to worry about trends. You don't need to worry about, it's funny, like the crypto market, it's one thing after the other. I saw this one thing the other day where somebody was selling a yacht, or someone bought a yacht, like a luxury boat, for like $250,000 like 2 weeks ago. This is after the market has been $250,000. They bought a digital yacht in the metaverse. I'm over it, guys. Like, I seriously think we're at like the end times. This is the kind of shit that just makes me think like, yo, humanity is coming close to its apex of sorry, I'm laughing. It's just I just think about what was going through that individual's mind when they reached out and took $250,000 from their life savings and bought a digital yacht. I mean, I don't even want to say stupidity, but you could buy a real yacht. Oh my god, man. I'm gonna drink some coffee real quick. Buffoonery is what I call it. We're at a time of high speculation, guys. We're at a time of high speculation, and we watch some things. I'll consider one sector for a second just to kind of, dip our minds there. DAOs. They all lost like 96, 98% of their value. And that's kind of like I'm kind of excited about that, When I see Olympus down, and shout out to Steven, one of my private clients, great guy, for bringing this project up to me. And the yield on these things are insanity, like Time Wonderland, which has some esoteric qualities to it. One of the things to remember about next year is we're going to be in the year of the rabbit, the water rabbit. So Time and Wonderland might do really amazing, into February of 2023. I don't know, but shit lost 96, 97% of its value, man. So yes, you're earning high yield in these DAOs, but if you went all in on them just because of the yield, oh, no bueno, So it's still a highly speculative market, and you got to be careful, And that's not to say that they're bad. We watched Ethereum lose 95% of its value. In 2018, we watched a lot of really incredible projects who have insane technologies that are really unique and have some use case in the future of finances and fintech. But with that being said, they're not impervious to 95% drops, So when you see a coin come down 95+%, that's typically like a good time to start building a position. But the problem is YouTubers were pushing this shit when it was all at insanely bubble territory. And that's why I don't like covering sectors like that, because it really destroys people. People got to understand, like 95 to 90, probably 95, 98% of people buy at tops because YouTubers are pushing a hot sector when it's hot, as opposed to pushing it when it's unknown. I'm really not trying to get spicy or to disrespect any other content creators out there, but I'm just letting you know the truth. So, people got to be careful, man, because if you don't have the emotions to withstand 95% drop, you're probably going to want to sell at that point. And then when you sell, it's typically right when it reverses. And when a coin loses 95%, just to get up into the golden pocket off the lows is like a 400% gain, which would probably put most people in profit and at least a double depending on where you bought. Because most people tend to buy bull traps, and bull traps are typically within the golden pocket. So anyways, that's a more technical outlook, but I'm just letting you know, like, this market, if people knew technical analysis and they had a long-term mindset, they would do so much better. than just blindly following content creators who push sectors at a time where they're really bubble like. And you could simply do this by just going on your RSI. And if you're seeing RSI reads in the 95 area, why the hell would you invest but people don't know that. And then the same people are going to write a comment on a video saying TA doesn't work after they buy a top, which the weekly RSI was sitting at 93. They could have taken 2 seconds to load up a chart, go to the weekly RSI, turn on, look at the number, and say to yourself, oh shit, this is a very simple indicator. You don't need to be that smart. Like, that's always sort of been my goal too, is to teach people TA in a way that is very, comprehensive and easy to digest. Even my Gematria, I try to keep it simple and thorough, The more simple, the more repetitive you are, the more likely you are to master a skill. When you're getting into TA and you're using 1,000 different indicators, it's going to get off the rails. I remember when I was first getting into trading, that was one of the biggest problems, is I spent most of my time seeking how to use indicators and all these, really interesting indicators that are kind of, now I look at them sort of like useless because they don't really tell me anything that other more simple and more basic indicators are already telling me. You got to simplify everything you do in life in order to have mastery. Like if you're going to learn how to play guitar, you want to be spending a lot of time in the beginning focusing on the basics, focusing on the fundamentals. Just the way you hold the pick is super important. Then 10 years later, you're going to see why all that time, that tedious practice in the beginning stage of just how to hold your wrist properly paid off. But a lot of the time when people are learning new skills, they want to just jump the gun and go over the basics very quickly, and they don't want to actually spend some time in the trenches. They just want to FOMO in with everything they do because they want to get rich yesterday. And then when things start going against them, they start complaining and bitching and moaning and pointing fingers. But in reality, it was because they didn't spend time learning a skill. So that's why it's really important that when you get into something in life, always take personal responsibility and learn, That's always been sort of the main goal behind my work, is get people to learn the code so that they could apply it what they're interested in, and learn the technical analysis so that they could apply that TA to the projects they're interested in. And then they could combine both of those things, the Gematria Numerology Astrology and the technical analysis, so that they could be able to do this on their own. And if they love the community that we have, beautiful. You don't need to talk about TA in our Discord. There's 20 other text channels where we talk about all sorts of other things, right? So that was the whole idea. If you're somebody who wants to get into crypto and wants to figure it all out, it's right there for free in the YouTube videos, honestly. And my mastermind course has 100 videos. My advanced trading course, has 30, 20 something videos. And with that, tons of information in there. I mean, damn. I see people selling courses that are $1,000 for a course. That's insane, But this is it. This is like kind of the world we're living in right now, where it's really hard to learn things because there's so many people pushing so many ideas, and you just got to do what resonates with you. But what I could say as words of wisdom is, when you're trying to learn a skill, always pay attention to the basics. Go, like when I was learning TA, for instance, I didn't learn it from YouTubers. I went and studied a Wyckoff method. So that's why in my mastermind course and in a lot of my work, I start out teaching people with Wyckoff method. Why? Because Richard Wyckoff was alive 100 years ago. He was an incredible trader. Wyckoff method is tried and true to this day, even in crypto, 100 years later. So if it's not broke, why would we try to fix it? Just be basic, because the basics are usually what works, especially basics that have been tried and true for a century, right? We don't need any of this new, crazy stuff to reinvent the wheel. Sure, you could get into that stuff, but always learn your basics first. Then when you've mastered your basics, you could start reinventing the wheel if you want to. That's what I've essentially done. I've taken Gematria Numerology and Astrology and applied it to crypto and applied it to technical analysis. That's a very unique thing because, well, that's my background. I've always been kind of a pioneer. I've always wanted to bring something new to everything I do. But when it comes to learning, I took the time, 14, 16 hours a day, learning these charts before I started coming out and teaching people about it, of course. I only know this because I was a trainer in everything I've done in my life. With my jobs that I've had, I've always played a lead trainer role. I was a traveling trainer for a corporation before I started being more nomadic and moving around, and always teaching people music. So it's just kind of built in my blood to teach. And with teaching, I always learn that a lot of the time people learn best when they're actually learning basics. And in this world, it's definitely become quite hard to learn just because of the amount of information. We have an information overload right now, and it makes a lot of uncertainty. The internet age in and of itself has created quite an amazing amount of confusion. So, anywho, anyone who's made it to my work, of course, if you're watching this, you're a Patreon supporter. I really am appreciative and grateful for your support. If you made it this far, you see the way that I like to design everything is based on something unique, but also something that goes back in time. Whether it's the TA with Wyckoff method or if it's the Gematria and talking about the mythologies, theology, talking about where our origins are from. All of these stories are super important because they are reflections of the cosmos, which are reflections into us. It's our personality. Even zodiac, it's a reflection of something that is greater than us because we are the sum of its parts. So we always have to go back to those origins in order to truthfully learn something. So let's get into the Bitcoin TA. So Bitcoin, it's been in a very interesting sort of uptrend, very similar to this choppy action that we had back here. Perhaps it is very similar to here, but I want to start with something that might be helpful. So I'm just going to make it very simple like this, and I'm going to measure from the top over here down to this bottom here before we broke out and recovered. That's 97 days. So I'm going to do the same thing from this top, and I'm going to go over 97 days, and we're going to see where we end up. And we could see we're at February 15th. Okay, this is really important to know because February 15th is pretty much the day before the next full moon. So if we take from February 15th and we go over to at least this Rosh Hashanah top, we have about 47 days. So I'm going to do the same thing. I'm going to go over 47 days, and we're going to see the time frame this puts us in. And you could see that's around April 3rd, right? And this is important to take note of because this is around the time that Bitcoin actually had its all-time high last year. Okay, so it's an interesting structure to consider, and this amount of time between today and April 3rd is a substantial amount of time for Bitcoin to have at least a bull trap. So we'll break this down a little bit deeper in the TA, but I just want to show you how I'm perceiving this right now. Remember me talking a lot about this fractal down here and saying that I would not be surprised if Bitcoin redid this whole fractal, essentially having a boring or scary, but also boring January. And this could lead into mid-February, and by February, late February into March, we would have recovery. So I was not anticipating a V-shaped recovery. That's pretty much what I've been considering for a while now. Ever since we couldn't hold the support at 46 or 47K, the 0.5 fib, that was where I started to get a little bit more on the side of bearish in the short term, and then recovery into pretty much early April, no later than May. And the reason why I felt that way had everything to do with the eclipses. So, excuse me, I'm just going to drink some water real quick. So, we had a big eclipse washout over here. Then we had another washout in December, 24th. And since then, the market has been pretty much mimicking this similar structure of just over dramatic selling with very little narrative to push it to these levels. Now, there has been people saying, well, like, what's going on with the Fed is causing this. But you got to remember, the Fed isn't changing interest rates now. They're just talking, okay? Just talking. They're not actually, they did not increase interest rates, okay? You got to remember this. So has anything fundamental changed about Bitcoin or the crypto market? Nope. So what's going on right now, the sell-off that we're having, is very interesting because it seems that there has been some coins that have topped out in their structures. And there was also coins that topped out around this fractal back here in like April and May, and they have yet to recover up like Bitcoin has recovered up. So because Bitcoin has done this double top thing with a slightly higher all-time high than the all-time high back in April, this sort of bull trap thing has created a completely new structure that we've never seen before. Okay, so let's look back at to how this ended over here. We had a washout with a bounce, and then this bounce led to multiple higher lows. Okay, you can see here we have our higher low, then we have a higher low, then we have a higher low, then we have a higher low. But there was bounces along the way. This bounce right here was a pretty dramatic 97% off the bottom. This bounce right here was a dramatic 54% off the bottom. Then we have this bounce here, again, about 46% off the bottom. We have yet to have any bounces like that since this drop. The biggest bounce we've had, this one was 13%. This one was more exaggerated, but still only 15%. We have yet to have any bounces since this downtrend. Even Bitcoin during, look at right here, you could see this, we have a dramatic sell-off, and then off that sell-off, we have a bounce. That bounce was 38% at least. Okay, we have this dramatic sell-off, and off of that low, this bounce was 65%, right, before the COVID crash. So what's going on? We have yet to have any bounces, and this is very similar to this drop over here, where we just dropped, then we had this consolidation range with lows, and then basically a triple bottom structure. You could call it a triple bottom, but I mean, this is a true double bottom down here, and I'll show you by taking off all the drawings and then just turning it onto line or area. There was your double bottom here. And I know this was a closure, so you see how quick this V shape is right here? Technically, we were right there. It was just one day we had price action at those lows, which would have been within those lows right over there. So it would have looked like a key bounce level. We do have Bitcoin being very volatile, though. So, of course, we can get trading action at the lows, retesting wicks, filling in the wicks, and then dramatic bounces from there. We see it happen all the time in Bitcoin. So now, this recovery that we're getting right now, remember what I said in my last YouTube video? I said I do not anticipate a V-shaped recovery, and I also do anticipate a double bottom. Now, this double bottom could come in around 35K. It doesn't have to be all the way at a retest of the wick at 33. So it could look something where we return back to around 35, 34 maybe, into February 15th, around that full moon, because we typically get our lows around full moons. And then once we break this neckline, and again, I'm not calling the neckline right here, Bitcoin, it could come all the way up to here tomorrow. We could open up tomorrow and see a 10% pump. I'm not saying that's what will happen, but that's the kind of shit that happens with Bitcoin. So anything lower than 44K is just another lower high. Right? So anything lower than this level right here, we just have to be okay with building a base, and we haven't confirmed a base yet until we have a reversal. We don't know that there's a reversal until Bitcoin gets above 44.4. So this level right here. So that's important to note because we see this all the time where Bitcoin, I'll show you. So we have our all-time high, we come down, we have a little bit of a recovery, but still rejection down to another low. Then we get bought up very quickly. That was a big liquidation event, so that was mostly leverage, and that's why that wick was so dramatic. But then you see here downtrend, we come up, but then just another higher low. We did not get above the highs in the structure over here. So what happens? Come down to support, can't hold support, drop down another level. Then we have this key level of support back here from the Rosh Hashanah full moon. You see, we come down, base around there, come up, cannot get higher than the prior high. So we go back to support, can't hold that, drop again. You see the pattern here? It's just basic technical analysis, okay? So the area we've come back actually was this level back here, the level that we were getting a lot of support and resistance on back in the summertime after the May drop. So if I kept my cursor right here and you look to the left and look to the right, you're going to see what was going on here. We had a support here, then a bull trap fake out to the downside where this level of 35,000 flipped as a short-term resistance in a big W pattern. Now, since we've actually just back tested that area, which is pretty normal. And remember, I was telling you with the CME gap, that was when the CME gap was created. Basically, over the weekend around July into this time frame, Bitcoin just blasted through this neckline without back testing it at all. So it just moved all the way up through it. And you see this back test right here. It never came down to 35. It just had a quick retest and then continued. And then after this whole structure was back testing the prior highs in the structure, this was a very bullish bounce, okay? But we never back tested this area. So if I go to the CME chart, you're going to be able to see what I'm talking about. And this is going to make so much sense. But this is the kind of stuff that matters when it comes to TA. You know, we have probabilities, but we also have to manage risk. And unfortunately, that's just the way this game goes. We do have washouts. So you could see right here, this was the gap I was just talking about. This is the CME chart, the Chicago Mercantile Exchange, which will be opening up tonight around 6 p.m. So this area, this gap was actually filled on the 24th. You see that this wick came through this level, filled it, and since we actually had a bullish bounce and the day finished green, the fact that this was a low in the structure, filling a CME gap, which goes all the way back down to this key support level of the summertime, followed by the same day ending green, and then since in a short-term uptrend, this is a healthy sign. And another thing that tells me something to look out for would be this downsloping resistance line. So if this downsloping resistance line gets broken, I'm not like having a party just yet, because we do have we do have a little bit to worry about with it's converging. So yeah, I mean, honestly, when it comes to the technicals, we do need to break 44. Wait one second. Just clearing my throat a little bit. So we still need to break 44. And if we could break this on the CME chart, that would be golden. But for now, this area right here that we've come back to fill is a textbook level to fill. That gap wasn't like, I mean, I'm not 100% gung-ho on utilizing CME gaps for all of my analysis that I do, but for Bitcoin, this was pretty key to come back here to this level. And the fact that we did might be long-term bullish, telling us that this level right here of 33, 32K for Bitcoin might be the absolute low in the structure. And that's not me calling it a bottom. I'm just saying this sort of TA that I'm sharing is very valid I'm not using an opinion right now is what I'm trying to say. This isn't like Waters Above's opinion. This is like if you study technical analysis for anything, whether it's Forex or the traditional market, when you have a large wipeout in your chart, and then you have a recovery with structure followed by new highs, and then you come back down to fill the gap, plus having a green day at the bottom wick, the day that you had the most dramatic downside pressure, plus a bounce, that's bullish. Like, that's just what it is. This isn't me saying that we're going to go to new all-time highs, but this from a technical perspective was very nice to see, actually. This is healthy. It's not a problem. Now, how did it treat the altcoins? Well, remember what I teach you guys, what I've been teaching for so many months now. When Bitcoin gets bearish, it's gonna destroy the altcoins. And that's why I teach in my mastermind course having at least half of your portfolio in Bitcoin. I know it's not like fun, it's not as high ROI, But you can't just be thinking so much about the returns. You also have to think about the losses. So when it comes to investing in altcoins particularly, you have to break up your investments into at least 10 minimum investments. You have to continue to buy that dip whenever you're seeing those prices hit. And if you're not comfortable with buying dips because the price keeps going lower, like in the event of some of these DAOs, then you just have to deal with that. You have to sit in that investment and be patient and calm. That's just life. But don't get mad at yourself. Don't think that you made a bad mistake, because I'll give an example. Let's go to the Amazon chart. And this will help people out, because I remember the other day when I was looking at the CoinMarketCap chat bot where like people are chatting. Oh man, it's so toxic there. And I've seen this behavior sometimes, like even in newer investors who have joined the community. They don't really know what's going on. They don't know TA. So when they're seeing a coin continuously push to the downside, they're freaking out. But let's go to this Amazon chart just to sort of prove a point. I'm going to go to the weekly. All right. So this is the .com bubble. Okay, the .com bubble here. And you can see that we have a double top, this double top ending around the December timeframe, actually. So what we're going to do is, and this looks very similar to Bitcoin, actually. Now, you'll see what happened here. So I'm pulling my fib from the April high down to the swing low in August. This is also very similar to Bitcoin. Remember around here, Bitcoin went from holy shit, it looks so much like the Bitcoin chart. So imagine this is 2020 into 2021. Bitcoin goes from 10K straight to 42K, then has a big correction. Then this correction gets bought up into into February, and it tops out in April. This is exactly what Bitcoin did. It topped out in April. Then it had a big consolidation and lows into the summertime. You can see right here, it says August of 99. Then after that, it comes up into, this is the same chart. I don't know why I didn't notice this. Fuck. Okay, so then it comes up into Shemitah, or into the Rosh Hashanah, excuse me. After Rosh Hashanah, we have a pullback. Yo, this is the same chart. That's crazy. Oh, man. Okay. It's the same chart. Imagine Bitcoin had this crown top around like May. Wait, no. When was it? It was like it was like August into September. Oh man, this is crazy. Let me show you what I'm talking about. This is my trading chart. Let me cancel all this noise. Put it on weekly. This is mind-blowing, bro. I know it looks different, but you see this crown right here, followed by Bitcoin going from 10K to like 40K. That's the same thing here. You have this crown, then this price going from $10 all the way up to $100. Then it happens in January. So we'll go here. You see, we topped out in January. Then we have a pullback. This pullback leads to a high in April. So we have here, pullback leads to a high in April. Then it washes out into June, and then double bottom kind of deal with a fake out bear trap. That's a bear trap, by the way, when you see the price break the low in the structure. But where did it come down to? Right at the wick lows support to retest, followed by a bounce. And you see this happening around the summertime. So Bitcoin, we washed out. Where did we wick down to? Perfectly at the lows of the correction after the January highs. We did it 3 times. And then even had multiple bear traps, because this would be the bear trap on the wick. You see how quickly it got bought up, and this would be the bear trap on the closure weekly lows. Then recovery into September. See here, recovery into September, October. Then a correction, just like here, correction. Then all-time high. Here, all-time high. Slightly newer all-time high too. You could see it's slightly higher on the closures. So this closure high was 113, and this closure high over here was 108. So it was just a slightly higher close. And on the wick, it was... Okay, yeah, that was the wick. Never mind. 113, and then the high here was 110, 108. So it was barely a new all-time high, just like over here, and then a correction. Now, what's very different about this is you see when we're pulling this fib that there was a recovery on this candle right here. This recovery actually came in the last week of January, which is really interesting. But anywho, this recovery that we got went back to the 618, and we've yet to have any of that happen. Let me show you with Bitcoin. So the 618 would be right here around 51K. We actually haven't really seen much. I mean, we have come down to the 236 recently. That's where we're playing at right now. You could see the 236. So this is probably showing us what's to come. Probably going to go to the 618, which is something that I've been kind of talking about, like a bull trap into the golden pocket. Bitcoin's a little bit more dramatic, so Bitcoin's probably going to go to the 702. That would be really nice to see, obviously, like a 54K Bitcoin, because the higher Bitcoin goes in this bull trap, the more liquidity rotates into the altcoins. Holy shit, this is like the same chart, dude. That's crazy. Excuse me. And then you see this is a very key downtrend into Shemitah. So that would be the difference, is we've been in Shemitah since right here. And you see when we entered Shemitah here, it just went on a downtrend all the way until the end of Shemitah. Now we're in a different Shemitah year, clearly, because we entered Shemitah here and then went on to a new all-time high. So it's not the same. But this is an interesting structure because this was the dot-com bubble. And the dot-com bubble and crypto are very similar because we have 1,500 cryptos? We have 17,000 cryptos. Fuck. Useless. They're all useless, by the way. Maybe 100 of them matter. I would say the ISO 20022 coins matter in regards to the fact that they will be part of the new financial system whenever that day comes. That doesn't necessarily mean that they're the best investments with the most ROI. That's just, it is what it is. The government and the big banks have come out and exposed that, Fedwire, etc. But that's fucking 10 coins. And then of course you have the top 10 now, which are most likely not going anywhere. Cardano, Ethereum, XRP, Solana, Terra Luna, Bitcoin. Those aren't going anywhere. Very much like Amazon. Amazon and Bitcoin are the same. But okay, so the point of this whole thing about bringing up this chart was this sell-off, right? So this sell-off that we had that was dramatic, we go from the 1 fib down to the swing low. That's 94.8%. Does that remind you of something? Let's go to Ethereum and show you. Look at what Ethereum did. From this top right here at 1440 down to the swing low right there. Boom, 94%. So this is like hopium. This could be like the dot-com bubble crash, or what's to come could be like the dot-com bubble crash. We don't know. Nobody knows. But what's different over here is this wasn't around Shemitah. This is Shemitah. And we know that this Shemitah is always a problem. You could see it even here with the dot-com bubble. Not only when Shemitah started, the Amazon continued to lose 87% of its value during the start to the end of Shemitah. So overall, it lost 94%, but 86% of that 94% was lost during that time frame. And you could see right here, this is a textbook level. I'll show you what happened. So I'm going to hide everything. So here's our support. You see 44. Then we broke through that level. Once we back tested it and confirmed it as a resistance instead of a support, that was when the downtrend happened. And that happened exactly at the start of Shemitah. How textbook is that, right? So is the Bitcoin and also coins lately have lost 85 to 95% recently. So it's really interesting how this has been going on. How Bitcoin has actually been holding strength versus, and then there's other coins that have held strength Phantom, Terra Luna, Solana. I know they're correcting, they're in their corrective phases, but they've still been holding structure. So now the other point of what I was trying to say is, let's just say you bought during this shit, right? And then you had a huge correction. And this is like what altcoins do. This was the whole point of me bringing up this Amazon thing, by the way. Now, your patience will be rewarded because this was how many years? This was 2 years of from being in the trading range to the lows, and then the corrective phase into this bigger trading range, bigger consolidation range, was part of what came to be the recovery. And that because of you have your low in your structure, your higher low, and by 2008, which is a pretty long time later, crypto is going to move a lot faster than this. But this is my point. If you dollar cost average through this whole time, even if this was the bulk of your trading range, which was back here, the dot-com bubble range, if your average in Amazon was $65, let's just say, and you bought at the worst fucking time, and you just held patiently, you're up 4,400% today. And you could have been dollar cost averaging for over a decade. So every time, instead of putting your money in a 401k, putting your money in a retirement plan, you were putting it in Amazon. Even during the uptrend, even during the huge sell-off. You know how much gains you would have? I mean, look at off the lows here. Look at this huge inverse head and shoulders pattern we have here on the weekly, right? If you were buying at that average of 11, that lasted for you for a pretty long amount of time. This is the weekly chart, by the way. And you even got another test right here. That's almost 2 years, guys. You could have built your position at 80, 90% down. And look at the result to where we are today off of those lows. 26,000%. That's like an altcoin, okay? This is what happens when you're in a nascent technology. It's not impervious to huge corrections, but look at the long-term outcome, right? This is what, I mean, wow. Buying off these lows, the next Shemitah, you would be up 780%. Even if you cashed out around Shemitah, because that's typically when you get your corrections. This was a weird one. This was a completely different market that we had some issues with. We had like the Asian markets, and even the indices had a little bit of a problem around this 2015 Shemitah. But typically we do see they have big corrective phases post Shemitah. So you see we pushed up into this one and then still had a drop. And that drop there, we're looking at about 40%, 35%, which for a project that's this deep in the game, from 1997 to 2016, a 30% drop is similar to like, a 70% drop if we go to the beginning of a company. So you see during the COVID crash, there was a 35% drop. You see, as it becomes more mature, it loses less, it loses its volatility, and it also loses its ability to decrease in value. See, the C-word crash for Amazon was only a 26% loss, guys. And then look at what it went on to generate on average around a double, right? So you take this time frame and you see what it did for altcoins. It was like tens of thousands of percent. I know I'm making this video probably longer than I anticipated now, but this is a good thing to bring up, just the philosophy of the long-term hold. So the coins that lost this much of their value, if we just continue dollar cost averaging over a decade of time, it's going to, and crypto is 2 times, 3 times quicker than all this shit. So when we say a decade, we're really talking about like 3 years. Seriously, we know this, and that's because of the Bitcoin halving event. The next halving event is 2024, and Bitcoin's halving events are always around the time where we see the market tends to go to new all-time highs across the board. So, imagine if you bought Dogecoin, $1,000 in Dogecoin 5 years ago, you're a millionaire today. If you bought $1,000 in XRP in 2015, you're probably close to a millionaire today, even with the coin being suppressed and not pulling off crazy gains. That's amazing. So that's why the bull and bear market conversation is just a waste of time. That was the main concept I spoke about in my last video. Because sure, this dot-com bubble was the end of the world. So many companies were going away. But if you just believed in the project that you were putting your money in, which because you did your due diligence with research and you see where they fit in long term, like I just said about the ISO 20022 coins, if we see the documentation showing that IOTA will be part of it, then there you go. Like, I mean, do you think that coin's going to go to zero? Probably not, right? That's not me telling you to go FOMO in your life savings into IOTA. I'm just saying this is how you think as an investor. You know the technology has a use case and a position in the future financial system, so start building a position in it, not financial advice. And over time, you're going to be able to generate massive amounts of gains regardless of the implementation by the government or by the major banking institutions, because in and of itself, as a technology that follows the path of Bitcoin's scarcity model continuously gaining in value, which has still maintained, even though Bitcoin was 69,000 and it's down at 38, that's what Bitcoin does. It has huge corrections and then it has buybacks. And these 55% dips that we're getting with Bitcoin might be the new dip that we get. We might just continue to see 50% dips with Bitcoin as opposed to 80% dips. And as opposed to getting a 90% dip with Ethereum, we might start only getting a 70% dip. You see what's going on? Just like I showed you here in this Amazon chart, it's becoming more mature. So as it becomes more mature, it of course loses its volatility, but as the market leader, just like Amazon is one of the sector leaders, it's one of the category winners, any technology is going to ride the wave of the trend, so you're going to see that happen. But a big but, the more speculative the asset is, the more speculative the risk asset is, like something like Netflix. We can see if Amazon generates a correction that's this big, 27%, you're going to see something like Netflix produce a huge drop, something that, and don't quote me on this because I haven't been looking too much at stocks, but I mean, this looks like a fucking death drop, 49% in just like probably a couple trading weeks. Okay. It just needs more time, but look at the gains that this thing generated. I mean, geez, where's the bear market, guys? 58,000%. Just hold it. Just hold. That's really the point of what I'm saying right now. Just hold. Like, damn, 60,000%. Even this drop right here was nasty. 80%, but we see that in crypto all day, every day. Look at this. Look at that. Just off of that move right there, 5,000%. And we're talking the S&P 500 has an average return of what, 9% per year? So these speculative tech stocks, I mean, they do have big corrections, but if you just hold through the trend, you're good. You're good. There's like scandals going on during this whole time. There's like all this crazy shit going on with Netflix this whole time. But look, if you were early, you won. Right now in crypto, we're super early. We're like at this stage, when it comes to when we're comparing it to like a Netflix or something similar. So anyways, my analysis on Bitcoin is very simple at this time. We do have to consider the full moon of February. The full moon of February is coming very soon. It'll be on the 15th or so. I plan to make a YouTube video where I'll be breaking down a little bit more of the immediate dates, but I've already given you guys the key dates. We have the start of February, which will be Chinese New Year. And then we have the 2/2 date, the second day of Chinese New Year, the year of the tiger. And then we have the 6th being Platinum Jubilee. That's a big one. Then we have the 7th being the 2/7 date, 27 coming back to Jupiter in Chaldean Gematria. And then that is kind of like where I'm anticipating bearish energy into that move into the full moon. We do see microcycle lows up to 5 days before full moons or on the exact dates of full moons. Like we've seen it happen many times. I'll quickly show you. If I pull up my moon cycles indicator, you can see we got our low right here. This was only, okay, that was 7 days out. That's completely normal. This one here was a day difference. This one here was 2 days difference. This one here was on the day of the full moon. this low right here we got on the day of a full moon. And then this low we got here was about 6 days after the full moon. So we're within that cycle low. And that's another reason why I anticipated, slight recovery, but nothing crazy into this new moon. Just because of the energy, new moon in Aquarius, a little bit of uncertainty there. So the point being is that I would not be surprised if we have something happen like this over here, where we have our full moon, we come up bullish into the new moon like we did over here, that we correct to the next month's new moon, which we know is February 15th, 16th, and then out of there, we have our recovery into the month of March. All right. But for now, holding this the 236 on the daily closes, particularly the weekly close, that's very good. And then let's look at our monthly close. Let me turn off all this nonsense. Okay, so this is good. I know it's not good to be at a lower closure low from these two candles over here, but at least having a higher closure low than the lows in the structure maintains a bullish trend. So any closures below 35,000 on the on the monthly would be bad. And of course, we do have tomorrow as a trading day to consider. But with that being said, holding this level of 38, a really good monthly close would be like 42, but we don't know about that. Okay, so this is another thing. You see where this yellow moving average is coming in? This is the 8 simple moving average on the monthly chart. This is coming in perfectly at around 46K. And 46K is about the area we would anticipate for a move up for a bull trap. We see it happen back here. So this was the prior all-time high for Bitcoin 2017. When we closed below the 8 simple, we actually played around it a little bit, came back up into it, and then failed that level. But then coming down again for another attempt. And this secondary attempt is kind of what I showed you a little bit earlier, where we were having multiple lower highs, and that confirmed the trend. Right now, we haven't confirmed a reversal because we're still holding the lows. Not only are we holding the wick lows, because the wick low comes in the structure at 29K, but we're also holding the macro closure lows, which is 34. So again, if we're holding these closure lows and holding the wick lows simultaneously in the month of February, which is coming up soon, that's still an uptrend. And this does look like a double top, but there would not be, I would not be surprised if we had a triple top. That would be a huge crown distributional event, most likely. And then, Bitcoin. If Bitcoin was to get back to 57, we could just have some news come out right there on that day talking about how Apple is going to convert 2% of their cash position on their balance sheet to Bitcoin. And right there, that's all it needs for Bitcoin to go straight to 70. Literally, that's the way Bitcoin works. We saw that shit happen back here, where just Tesla came out like 4 weeks after they were buying Bitcoin, and they released that they were buying, they were putting Bitcoin on their balance sheet and accepting Bitcoin. I mean, that was shady, but that's what they do, man. They buy dips like they did here. They buy dips and then they just send it. It's classic. So anywho, the point being is that holding these closure lows on tomorrow's monthly close would be very good. See where we're at with the weekly. Is this a bi-weekly close? It is. Okay, so this is a bi-weekly close, and again, you could see the level we're at right now is pretty much back testing the prior resistance. So we have the resistance coming in here at around 36. Then we have all the resistance still at 36 on the bi-weekly, and right now we're trading at 38. So closing tonight above 38 would be healthy. It would just be a back test of the prior resistance. But again, it'll be closures in the structure that are showing reversal. Not a full-blown bear market reversal like below these levels, but it would be below the Rosh Hashanah full moon. So that's not great. But again, this would be a typical area to base, just because we have, what is this? Like 70 days of trading range around this level. And then back here, that was the resistance we had before we continued up in the transition into 2021. So this 33K level was very important. And the fact we back tested it with all that CME analysis that I shared already, it's giving me a feeling that would be a good area to base. And I would not be surprised if we do get a double bottom into it around the full moon coming up, meaning we will potentially have another week or so of blood in the streets. But again, if it holds that level of 33, 32K, that would be completely normal. So weekly close, this is a problem. We have the wolf cross, which is bearish. Still, we could have these bearish wolf crosses like we had over here in the C word crash, and then a complete recovery from there. So this has happened before, guys, where you see where these are intersecting is around 47K. That's pretty much around where the golden pocket starts for Bitcoin. So that area right there, getting above that, if that was to happen, we could actually have a complete recovery from those areas. So that's like the more macro analysis on Bitcoin. Holding those levels, getting above 51, and then getting above 51 would be a complete trend reversal. So that's important too. We'll go to Ethereum now because we have the monthly close on Ethereum. Obviously, monthly closure on Ethereum holding this level is pretty low. I don't like to see this, but if it could hold and get above that 27,800 level, which would be like an additional buyback of about 5%, that'd be really nice. But the fact that it's below this 8 simple moving average on the monthly, that's a bad sign. That's kind of what happened back here. So you see the end of the bull run for ETH. Once we closed below that 8 simple moving average, we got bought back up. 1 second, I'm just going to drink some water. Okay, so you see once we closed below the 8, we did have a nice buyback off the lows. This was an additional buyback of 127%. So even though we are closing below the 8 simple, we've seen this happen in the past, where closing below the 8 simple has still brought us a bull trap and a nice bounce. And that would be something like the $4,000, $4,100 area for ETH. You know, somewhere around 4,000 to 4,200. But again, I would like to see this monthly close stay above 2,800. That would be the key level. Let's look at the biweekly. So the biweekly, again, similar story. Getting above 2,800 would probably be best. For now, this drop that we're having is breaking structure in the shorter term, but in the long term, we know that it's these levels down here are the true bottom. You can tell because here was all of your resistance, and then once you broke out to a new all-time high, you backtested it and flipped it as a support. So that area right there of 1,900, that would be bloody. If it would take Bitcoin going below 30K probably to make those prices happen. But in the meantime, this is a key area to hold because of these prior highs in the structure, and you could see these prices right here back tested that same level of around 2,700. And if I was to look at this on the basis of fibs, let me turn off this. We're probably at a key level. Yeah. So remember I showed you this in the last analysis. When we pull the fib from the prior high in the structure down to this level right here, I'll show you just because it looks confusing unless I was to pull it for you. So I'm going to go from these highs around December down to this low right here. Or never mind, I'm going to pull it in reverse, sorry, a bearish retrace. So I'm going to pull from that low right there on the bounce, and I'm going to pull it up to here, this level, and you see where we came back down and back tested was the 1618. That's a very key level when you're having a bearish retrace. That's completely normal. That's fine. So let me show you the long-term fib would be from here, this level, to the swing low, which is this level right here. And I'm going to pull that out and show you where the buyback area would be. It would be within here, somewhere within 3,300 up to probably 888 fib, to be completely honest. We've seen that happen before where the bull trap comes up as high as the 888 fib, 4,000. And then anything above, honestly, 4,200, you're pretty much on a bullish reversal, like a complete, yeah, that would be anything above 4,100. That would be a really dramatic buyback. And that could lead to a new all-time high for Ethereum. But until then, we have a ways to go. We would have to probably continue to hold this 236 area, which we're at right now. I'm going to delete this one fib. So you could see this is the macro pull from the prior all-time high in April down to the swing low in July. And you could see we've backtested the 236, which is another key level to hold. That was the W breakout area from back here, bounced, and now getting above that 382 would be nice, but still, it would take Bitcoin having a nice recovery into the mid 40s to really see this move for ETH to come in. And ETH always moves after Bitcoin typically. Like, so it would take a Bitcoin getting above 44K, then that liquidity will start to show up into ETH. People will start going long, and people will start basically FOMOing into that recovery. So it could take some time for that to all play itself out, but that's the way it would work. Let's look at XRP. So XRP, this is a bearish pull on the retrace. So we have it from this breakout target here. Remember, we had the SEC nonsense happen. So we had this run up for Flare Network, and then we had the SEC case, and then the huge sell-off. And then when we broke out, we back tested this level here at 36 cents and then had a huge move to the upside. So that's the way the fib is pulled. It's bearish pull from this level to the swing high. And that pull right there shows us that the 888 fib has gotten some love. So we came down to back test it on a double bottom. Started showing an obvious downtrend because we have a high, lower high, lower high, lower high, lower high, and then we came back down to to back test this 888 again. So these are wicks, and that's kind of, telling me that this is coiling up. This has been in this pattern now for a long time. And we see bearish patterns on charts typically take like about a year to play out. And right now we're about 290 days. So what I mean by a year to play out is from the all-time high to start of recovery. It's about 365 days. And that would put us into, look at that, put us right into April, just like I told you with Bitcoin. Literally April 14th, the 144 date, which was, obviously, because I'm pulling it 1 year later. But yeah, so anyways, around the mid-April timeframe is when we would anticipate that move. So holding this 888 level would be important. If we start to close below 44 cents, that would be an issue. So we do not want that. We do not want to see any closures below the 44. That would be a sign of a complete break of structure. But for now, holding this 50 cent level is key. Getting above this 786 would be really nice. That would probably be showing signs of a $42,000 Bitcoin. Like, we would need about a 42K Bitcoin to 44K Bitcoin for XRP to start getting back into the 70s. And you see this 80 cent level. That's the key level to break for this to start to recover. And then there's an opportunity for an inverse head and shoulders where you have left shoulder, head, and then right shoulder potentially playing out something like this. So this would be the head recovery, come up to the 618, and then you start to form the right shoulder. And then you have here the break. And then you would have your move up in that time frame, something like that. And it would be a similar amount of time too, because if you were to measure from the start of this shoulder, it was about 25 days. And then if you were to look like, let's just say something like this, it would make sense. Sometime into the mid-April time frame for the mid-May time frame for the full moon of March. Keep mixing up my months, the M months. Back test and then continuation. That would be a really normal way to have a alt season, because if we are going to see Bitcoin recover into the 50K area, 48 to 55K area, that would be about where you anticipate your alt season to kick in. So I do have a video coming out soon for part of the exit strategy blueprint that I'll be designing, and it will have a comprehensive breakdown on XRP as one of the videos. And then I'll have you guys vote on the other coins. We'll probably do about 5 coins as part of it, and I'll let the patrons do a vote on what coins you want me to make exit strategy videos on particularly. So let's go into the coins that you guys wanted me to review. We have Litecoin. Okay, so Litecoin did break structure. So the first thing we're going to do is pull a long-term fib. We're going to go from this December high over here down to the swing low. This is a huge like cup and handle formation. So Litecoin during this bear market time, if you want to call it a bear market, it lost about, let's see how much losses it's had. Okay, classic, about 94%. And then since this structure here, we have seen it make a slightly new all-time high, but this is like where the cup and handle comes in, because now you have a handle forming. This is ugly because it's crypto, but this is like what's going on here. So you might have this huge falling wedge sort of deal, and those falling wedges typically do break out bullish. Now, let me turn this fib off for now, and we're going to show the shorter term pull. And it would be this level, but this level has broke. Okay, so now that this level is broke, that's very much like a spring. Okay, so you have here, after you make an let's just say we're talking short term. You have here a rally. After this rally, this is called your buying climax in Wyckoff. Then you have your sell-off is your selling climax. Then here is your automatic rally. Then after your automatic rally, you have your spring. Your spring could be indicated by low or low in the structure. And also volume kicks. Oh, actually volume is pretty damn low. It could just be Bitfinex as an exchange. That's another thing to remember when you're looking at volume signature. You always want to go to the exchange with the most trading action. For this particular coin. So anyways, it doesn't really matter, but typically you do want to look at a spike in volume when it comes to those springs, kind of similar to over here. You know, when we had this massive sell-off, you have a big spike in volume right there, and then your recovery back to support lows, which pretty much you can see it only took about like a week or so to get back to the support lows. That's a healthy sell-off, just a shakeout. Pretty much gets rid of leverage. So this would be your spring, and then the next phase you would have is something like this. So again, assuming we get an alt season sometime into like April, we'll put a marker there. Some sort of move like this. Around the 236 is your key level, and then you'd have boom, back test is your kind of, you call that a test. And then you have like an SOS, form a slight crown top, and then another back test on the 236. So it'd be something like this. And then continuation above the golden pocket, this area right here, would lead to alt season. And by the way, let's just show you what Litecoin did in the last alt season so you can know that this is how it works. So look at how quickly it runs up from the high to pretty much the breakout. It took about 36 days from the breakout lows to the highs. So if we were to go back 36 days from around April, let's just say Bitcoin's move was around early April, where it topped out like I showed you when we were in the beginning of our analysis. And then I go over 26 days or so, or sorry, around 30 days. This brings us into around May 7th, and that would not be weird because May 15th we have that time frame of an eclipse. So that would make sense if the alt season ends due to the energy of that eclipse. Now, with that being said, this coin is pretty undervalued considering that its prior all-time high in the structure is slightly higher than, you know, we're slightly higher now. But even then, huge sell-off. And the fact that it's only barely made a new all-time high is a sign of, I don't think this coin has much excitement in it. Perhaps it's more an OG coin, obviously, and it doesn't have that sort of attention that it used to get. And with that being said, that's kind of a reason to maybe not put too much money in it. I mean, price discovery levels here would be looking somewhere into the 1400s. We could align this pretty well with a fib pull. Just go here. Yep, about 14 on an alt season. I mean, that's still a pretty dramatic gain. About 1,000, a 10x or so from here. It's not bad. The gains are there, but I just don't know if it's going to be able to make those sorts of gains with the fact that it's not really getting much of a good structure from this 4-year cycle. But one thing I can say is a lot of the OG coins are suppressed, like XRP, for instance, and maybe XRP having that run up will provide the liquidity and the kind of the FOMO quality to the OG coins like Dash and Neo, and Litecoin will probably be one of those coins in that basket to have that potential move. But for now, it's definitely not the greatest project when we're looking at long term. You would have had to buy in the bear market areas. There wasn't really much of a price discovery on this one. Let's move on to quant. And this is going to be a quick one on quant because there's almost no chart history, but I do have it pulled up over here on CoinMarketCap, and you could see that this looks like a blow off top. So I think this might be done. You see how low it's gotten since the top? And this was this in like September? Yeah, so this was kind of recent that this top happened. That would worry me that that's the end for this one. So I don't know if anyone is, this might not be the news people want to hear, but when we look at this coin from absolute lows, this is about 60,000% gains. So it's already made a huge move, and it's happened recently, only a couple months ago. Whilst some coins like Theta and VeChain, etc., they're a year out almost from their tops. So they have more likelihood to have some sort of bull run continuation, whilst this one topped out recently in the fall time. Now, with that being said, if Bitcoin was to get bought up to the 55K area, this I would anticipate has a bull trap. So let me show you. Assuming this is the most it's going to sell off. Let's look at the RSI getting into the levels of 16. This is probably where it's going to stop, just because you see this was the prior resistance. It's back testing it as support, so that's nice to see. But I would not be surprised if this comes back into like 250 into 230. I just don't think it's going to make much more of a move. This is probably it for this coin. Again, not a ton of chart history on TradingView, but when you go to the CoinMarketCap, you can see this thing was one time 16 cents in 2018. So holy shit, that's a hell of a move. If we were to go down to all the way to 16 cents, fuck. I mean, even if you went from 20 cents, you're talking about like, what the hell, man? The all-time high was 208,000% up. So I think that's it for this coin. That's the end of the road. And if anyone is still holding it, you might want to start getting out of it around the 250 level just to be cautious. It will look like a trend reversal, but most likely there's so much resistance coming in at 300. You could see it right here. You see all of that trading range where it couldn't hold, and then it started to cascade to the downside. It hasn't lost, actually it's lost 80% of its value thus far, and with a completely oversold RSI. But this is normal after you have such a dramatic move. This is probably your selling climax, and the next thing to anticipate is an automatic rally. An automatic rally is never new all-time highs. It is always a bull trap, and bull traps you typically get within the 0.5 to 618. So anyone holding this, you might want to get the hell out at the 618. And I wouldn't even bother getting into this project now because it's already pulled off so much gains, and I mean, how much more could it possibly go, especially with this type of structure? If you look here on the chart, this looks like a blow off top. This is like a huge blow off top. So yep, let's move on to NEM, ticker symbol XEM, I believe. Yes. Okay, again. Oh, okay. Yeah, so this one has this one is a little bit more optimistic. Let's see what we're dealing with here. 2,500. So that's not a crazy move. Oh, okay. Okay, this one I believe still has room, as opposed to the last chart. I do not think that has any more room. Okay, cool. So we could see here clearly that there is a prior all-time high that goes back to January 2018 that is higher than this move here. So that's a good sign. It tells me that there's a likelihood of this having some sort of continuation to at least a double top. At least a double top. So if I pull my fibs here, we could see we've gotten a double bottom since so we have buying climax, selling climax. This double bottom is showing me that like it's normal you have some sort of automatic reaction. We could call that the automatic reaction, double top before double bottom. And then, yeah, this has a ton of room. Holy fuck. Yeah. Just to prior all-time high, you're looking at prior high in the structure, you're looking at 800%. So from the move we're at here to the current the actual all-time high is about what a typical alt season move would be, 1,500%. So That's promising. And the fact that it keeps back testing the highs in the structure, you see the highs in the bear market pretty much right around there. That's where it keeps back testing. So this is a very strong support at 10 cents for this coin. This might be a good opportunity for people. Oh my God, what is this? Oh my God. It just keeps going. Holy shit, dude. Whoa. Is that 1.3 million%? Holy shit, dude. What a move, dude. Okay. Yeah. Wow. Congrats to anyone who this was a millionaire's coin. I could only imagine. I could only imagine this was 0.0004 pennies. And it went okay. Yeah, and also it's had enough time now to kind of chill out. So this is a fucking crazy. Yeah, we're looking at 1,500 days out from the prior all-time high. That's enough time to coil up and have a move. And I would not be surprised if this went to the 4236 around $3.70. So this could go up kind of similar to like a move that we would project with like a VTHO, like a 2,000 to 3,000% move. So this is an opportunity, man. If we have an alt season as expected with Bitcoin's recovery, this could totally move up and be a dramatic move too. And you see this kind of price action here where it lost 70% of its value on this move, and then it went down again after even creating a slightly new all-time high. It lost again another 60% of its value before the rally, and look at how quick the rally was. We're talking about if I go off this day right here, it's probably like 30 days. Yeah, 27 days. That was very normal. Back Ethereum did the same thing, 1,000% in 27 days. XRP did the same thing. It went up like 16,000% in less than 30 days. So if this was to do something similar off this time frame, of like March, if it went up 1,000%, it would get to the 1,618 in sometime by late April. That would be the 1,618 perfectly off that same measured move with the same amount of days. It's the bullish outcome, but this is the key support level of 9 cents. If it can't hold 9 and it starts to break below 8 cents on daily closes, this thing could absolutely wash out again. But because it's been in a 1,500 day sideways move with no new all-time high, it's suppressed, and that's something you want to keep an eye on when you're seeking opportunities. So let's go to Nervous Network. So interesting. I believe I've done a decode on this in the past. Okay, this is a decent looking chart. So let's see what it's done from this move here to the swing low. It's pretty much almost completed its extensions. You really only have the 4,236 when you're talking about the macro pull, and you could get as high as the 6 depending on market cap. From here, that would be a conservative move from somewhere 400% to 600%. And then that whole move considered would be about 3,000% gains, which I would assume this isn't the full chart history, but most of the coins did make new lows or double bottom lows in the C-word crash. So let's pull another fib. We know that this 8 cent to 10 cent level is key. Yeah, this is probably done. Just because coming all the way up, okay. It's holding structure, and when was this? March? It's actually not a horrible chart. This is pretty good. When it fails the golden pocket and then comes down, I just do worry sometimes with altcoins, especially like a lot of altcoins have a spring, but this is almost 1 year out from the highs. So if it could hold these higher lows, you could see right there, I'll expand this. You have your low, higher low, higher low. It's actually looking better than a lot of charts that have come back down to a double bottom, and some even broke the bottoms on a spring. So this is nice. One other thing we could do is we could pull a bearish retrace. I know this looks ugly, but I'm going to go from this bounce right here and see what's up. I hate going off of the parabola though. It's like not the way to do it, but we're going to get the 888 anyways, right? Boom. You see that perfect touch on the 888 off the bounce to the breakout. So that's always the key level that you want to look for. And it's holding that 786 now. So daily closes above this level right here, above 2 cents up to 3 cents is going to be your reversal. And this could continue for sure. It's holding structure. I mean, the back test on the 888 and then holding the 786 with another back test of the 786. It just needs to get out of that golden pocket now. And after multiple returns back to the golden pocket, you have 1, 2, and this will be your third. 3 times a charm. So you're either going to break through or you're going to break out. And that would be when I would start looking for at least the golden pocket again, which would be somewhere around 3 cents. That'd be a good level to start paying attention, because after that you have the 1618 and then you have that's price discovery. But I don't know if this will go much higher than the 20 cent level. You know, that's kind of where you're at. And that's still a really nice move. 1400%. That would be, if that was to come to fruition, you would need an alt season with a massive amount of liquidity flowing out of Bitcoin and into the alts, but it's possible. About 1,000 to 1,500% is what I personally look for. On the downside, I would not be surprised if this double tested a penny in the event of Bitcoin or the bigger alts were to have a little bit of a rollover into the full moon of February. So you want to look out for that level if you're in Nervous Network. It's like a file coin. Oof. Yeah, this is done. Oh no. Yeah, I don't like this. What the fuck is going on here? Oh, okay. Yeah, I guess this really dropped. This is probably the furthest it's gonna go down though. What is this, 90 something percent? Okay, this is 92% sold off. Mamma mia. With an RSI read into the 20s multiple times. Jeez Louise. Okay, this is around COVID. Let's see. It's already done a decent move, 8,000%. This chart looks disgusting though, with all these big chops, and there's really no structure at all. This is the ugliest looking chart today. Very little structure. Okay, let's pull a fib from here. Again, hard to know. Oh yeah, this is moved up into the higher ranges. Anything above the 6 fib is kind of just sky high territory. You kind of want to get out. So the fact that it made it all the way up to those levels and then has had a substantial pullback, this is probably ready for the selling climax. Probably really close to it. Yeah, about a year out as well. So this is probably the end of the correction for this thing. And we'll take off from the breakout. It's just a double bottom pretty much. Yeah, that's gross. And this is very dramatic here. Even then, you're below the 888. Shit. Yeah, this is bear market kind of chart. Really bad. Very little structure. You got your bull trap. You broke your support there. And then a 90+% sell-off. This is kind of similar to what the Dows have done. This could be an opportunity, but again, like the way that I would perceive it is if we're going to have an alt season, the way that this is probably going to come back up is to the prior high in the structure at best. So maybe comes back up into 100 to 150. Somewhere in this range right here from the 382 to the 618. And if it's lucky, it'll come back to the 702, but most likely not. That'll just be a big double top, and I would be cautious at the golden pocket for this coin, to be completely honest. I do not see this going into price discovery. This was probably the move. But you never know. Just because it's broke through support so deep, I mean, just from breaking through support, it's gone down an additional 60%. That's pretty ugly with very little chart structure. But this is a spring for sure. This is like the blood in the streets. Typically, you do get V-shaped recoveries on your springs. You know, something like this where we get back up to the 236, come back and back test the 236, and then you kind of figure out what you're going to do from there. But then you have this automatic rally opportunity when you're looking at a bear market. So I'm not really in love with the way this chart looks. It's a big, big, big dirty sell-off. It's come back into prior levels of support though. This whole territory between 15, 14, and 24. It's a lot of trading range there. It's also the trading range around when it was listed, I suppose, probably back in 2018. This thing was unlucky, I guess. Or it must have been one of those coins that if you got really early, you were in a good position to sell during the alt season. But it's gravitating to this $20 range as like a psychological level. So yeah, I mean, I wouldn't get into this coin unless I was building a very small venture capital position, because at a 90+% loss, you know, this on the next bull run, this is probably like as low as you can get in, you know. You do see 94, 95% losses, but shit, we're pretty much already there, man, on this coin. So not a bad place to build a position for the long term. But as for how this is going to react to an alt season, I don't know if it would have all that juice to make it all the way back to those levels just based on the chart structure. But again, you know, anything is possible with these altcoins. You see something like this where we come up, bull trap, and then fall and break down. That'd be very similar. Coming up and then break down. Or this could have been the structure right here where you have your top, bull trap. So you have here, top, bull trap, and then break down more. And then this, it just builds a nice structure along here, but that's a long time. That took an additional 600 days. I don't think we're in that same structure right now. We'll probably be there in 2023. So with the RSI so oversold on this one, again, it's most likely going to bounce from here. And then there was a quick recap to do on theta, just really fast. We'll wrap this up. So theta, almost actually a little bit similar, where we have a really nice support level here around $3.60, and it has broken down through those levels, about 36% off, but very quick bounce from those levels as well. So we've bounced about 30%, and now from this level to where the support level is at 350 is only about a 20% buyback. So this is very much like a spring. And then with this down sloping resistance line, that would probably be the area around where you anticipate it's a slowdown, somewhere into the 236 on any recovery. And then I would anticipate again some structure of like a weird inverse head and shoulders, followed by some recovery into potential alt season. And then when it comes to back testing this level, this was a key level because you can see all of this structure over here, all of this like 40 days worth of cluster, and we've returned back to those levels with, again, oversold RSI below 30. So this is something to consider. Theta is another one where it just made a massive move. So being up so high right now, again, we need to see how the altcoin market is going to react to all of this, but theta has its use case. We know that. Anyone who's been studying the future of gaming and streaming, you know where theta's position is. So for me, when I was building my theta position, I wasn't caring about short-term returns. I'm looking at this like a long-term. Like the way I look at theta is the way I looked at Ethereum, where Ethereum used to be $7 and then it went to $1,400. Well, this had its run from, you know, pennies, a fraction of a penny, I believe, at one point. 4 cents, basically 4 cents is the bottom, all the way up to $17, $15. And then it's been in a big consolidation range since. That's about a year out. So the way I see this going is, even if it's only going to move up into the 2618 or 4236, that is a very, incredible move when you're zooming out, all things considered. For people who are just in this consolidation range, just building a position, you have to deal with these long-term. I mean, it's only a year though. We saw with Amazon, it could take 2 years, 3 years to bottom out. And when you are chill and just building positions throughout that whole time frame, you see the returns are pretty immense. So that's kind of where I'm at on the theta play. I'm waiting to see how it reacts to this recovery for the altcoin market as a whole, but Theta's made its move, and I'm looking at it as a long-term play, like a play that could be 5 years deep for me. I'm not short-term on my Theta position. I'm literally looking at it like the second opportunity to get in on Ethereum when Ethereum was super low and undervalued. And you know, people might not agree with that, but that's completely fine. That's my investment thesis. That's how I'm looking at Theta. It's only about like 15% of my portfolio anyways. So where I'm at with it, it's kind of one of those things where if we get an alt season, I'm absolutely going to de-risk, but I'm still like very long-term on the Theta play. And I do see opportunity for $45 to $54 and then a blow off top potential of around 80. That's kind of still what I'm holding on to as a potential move. And if we were to examine that off of the absolute lows in the structure, we're seeing that somewhere around that 54 level is around 2,000%. That, again, it's a little exaggerated, so we might not be getting that in this cycle necessarily, but we've seen before like weird alt seasons similar to XRP. I'll show you where we have like a move up and then an additional move up. I would not be surprised if we do get something like that to end Shemitah, just like a very weird ending to a bull run. I'm going to show you what I mean. So we saw this happen with XRP back in the day, where it had this move, where we had a prior bull run, this whole like sub 10 cent. You see this? It went from like 2 cents all the way down to a fraction of a penny. And then it had one move like this, and then it had an additional move up. So this would be something similar that could happen again potentially, where we see a big move and then another little sideways consolidation range to another pump. And this whole move right here would be like a double alt season. It'd be incredible if we saw something like that happen. But that would be like similar if something like Theta went up to, let's just say $45, then corrected down to like 20, and then it went on to an additional run near the end. It's very possible that something like that happens. So it's something to be considerate of as a potential ending to an alt season, because we've seen it happen. So actually, we would have seen it be something like this. If it wasn't for the SEC case down here, we would have saw XRP go from this level here at around 25 cents up to around 70. It probably would have based around the 50 to 70 level, and then it would have went up again for an additional move. That's very normal when we're looking at the structure of how altcoins like to shift up in levels. You know, they just move up one level at a time. So the basic, idea behind Theta is just it needs to have overall alt liquidity movement in order for it to move, and it has had, let's just see how much of a sell-off so far. We're at about 85% down, very normal on the altcoins, and then we've been in this structure for almost a year now. So we're going on 313 days. This is about the time frame where we have our selling climaxes and then we move on for recovery. And one time we actually saw a break in structure followed by an alt season. I believe it probably happened on a lot of coins, but it's the DigiByte chart that I'm the most interested in regards to that. I'll show you really quickly. So let me show you by removing this. So you see DigiByte, it had this one alt season into like May, June, and then it came down to a selling climax, then automatic rally, then actually went lower. You see where it went lower here, and then it still went up for an additional run near January into the alt season time frame. So that's amazing, because that structure right there is something that could be happening on repeat, like the exact same thing. And I think right now the market has been very dramatic because of like options and leverage and all that other stuff, but you could see this structure right now, it's getting pretty close where it's like this coin's lost 90% of its value. A lot of coins have lost 90% of their value, and they're just returning back to a prior trading range. Something to keep our minds on, because we have seen breaks to new lows followed by continuation into alt season, and then you get up into that like 3618 to 4236 levels on your recovery. So anyways, I'm going to wrap this one up. It's been a longer episode, but we went over a bunch of altcoins, and The analysis on Bitcoin is more just to wait for the CME opening. And then, of course, we have the monthly close tomorrow. That monthly close will be interesting as we move into the month of February, year of the tiger and Chinese New Year. But it's all about the way CME acts when we have that open later tonight into the weekly close. We have had the gap fill. I would not be surprised if we break this down sloping trend line followed by potential double bottom into the month of February. We'll track that as it goes and then continuation out of that. So leave it at that. Enjoy the rest of your day. Much love.